Yeah, both gold and silver. I'm going to say from late October into February. I mean, there was more sell orders. I took personally more sell orders than I'd ever taken combined in the previous 15 years. Uh, and my thought process, I mean, just after talking to some of these people, this is not people taking profits. This is people running out of money and needing the capital. And I think it goes hand in hand with the feeling that there's less money on the streets. Now, in the last 3 to 4 weeks, we've definitely seen less selling, and then the buyers are picking up. So that phase or whatever it was, I think that's coming or has come to a close.
Yeah, well, interesting
And
to hear.
Chris, let me just mention, just to be clear, that's retail gold and retail silver. That's the mom and pop stuff. You're talking about orders of 500,000, a million, 25,000, whatever. I'm not talking about $50, $100 million institutional trades. That market is obviously tight, and you can see it. I mean, the perfect example is, what is being delivered off of silver. What was the number? 80 million ounces, 81 million ounces?
Somewhere around there.
And then add to that 333 tons of gold. I mean, both of those numbers are completely unprecedented, and that's institutional. Those are institutional traders, and that market is super tight. And you're also seeing the lease rates go up.
Yeah, and one question on the deliveries bill that I'm sure we've talked about before, but it would be good to get your opinion on again. How do you distinguish between, we are seeing the deliveries, although we're not seeing it come off the exchange or out of the warehouses yet?
Well, we will either see it come out of the warehouses, or you'll know that the buyers took whatever the number is, 15, 20, 25% premium to not take delivery. And I mean, that was a trick used for years and years and years, that if there was a big buyer that was standing for delivery, often you would see that just go poof, it's gone. And that poof, it's gone without anything being delivered. That's a fiat, bribe or whatever, not to take delivery.
Okay. Well, yeah, and like you said earlier, I've been wondering the same thing, where we saw this period of a lot of selling. I feel it was even longer than 5 or 6 months you were saying, but still, during that period, I've heard multiple reports of coins and bars that dealers are buying back being melted down, getting used for industry. And I'm thinking, well, if we're running a deficit, well, there's a lot of silver coming back online. What happens if those sellers at some point turn buyers? And perhaps we'll find out soon enough. Although, Bill, last question. I had planned to make this the Bill Holter reciprocal tariff special, although you were charming me with all that silver talk right off the bat. But any thoughts, for anyone who may be hearing the term reciprocal tariff versus tariff? You can explain what that means, and anything you'd like to comment on of how you think this old baby is going to roll out.
Yeah, reciprocal tariffs. I mean, you might as well just use the two words trade war. I mean, that's what it amounts to. If you got, we're going to tariff you, you're going to tariff us. If you're going to tariff us, we're going to raise ours, you're going to raise yours. I mean, no matter what, tariffs will slow business down. Tariffs will create less cash flow in the system. And you couple that together with what is Doge doing? Is it $200 billion? Is it 500? Is it a trillion? Is it 2 trillion? All I know is whatever gets cut or canceled, that's money that's not going into the system. So now you have tariffs that are going to slow down the cash flow. You got Doge that's going to be cutting cash flow off to a lot of these goofy, woke-tard programs. So what they're saying, what they're telling you And I mean, I think it's on purpose because there's no way that Trump doesn't know that, tariffs are going to create less cash flow into the system. There's no way he doesn't understand that if we don't spend $500 billion, that 500 billion's not in the system. It's not part of GDP. What they're doing is they're cutting the lifeblood off to the Ponzi scheme. And I view it as, I really believe, because they have to know what the results are. This is a planned takedown of the system.
Yeah, well, I guess the way I've been looking at it, I mean, back when right before the election, after the election, where it's like, at least based on what I've read of Austrian economic theory, which I guess there's some real life impact, but it's like, sure seems like if they do this, then that idea of kicking the can down the road, that the amount of road left would be significantly shortened. And so far now I know things can change quickly, but so far they have not indicated that, okay, we're just kidding. And I guess we'll see what happens. Although fortunately, if all of that does go through as planned, I know one of the best places to stay posted. Hey, there's the 45,000 contracts there. I don't know if there's anything else you wanted to have in the background and comment on there, but I get your point.
But look at the volume for the day. The volume for the day was it was a fraction of that. So my question is, how do you open 45,000 contracts if you didn't even do that much volume during the day? Where did they come from? Were they off exchange and now they're on exchange? I mean, I don't know. The math doesn't quite work out.
So there's some degree to which you're sensing that there's at least an indication of something unusual happening, which is also
right.
Okay.
Exactly.
Now, along those lines, obviously we've heard a lot about the metal coming from London to New York, which, I'm thinking about it on one hand is exciting, and there's again indicative of stress. Yet also at the same time, when we're hearing, well, is there going to be a short squeeze or a shortage in London? Even if there were, how do you distinguish? I mean, it's not like the metal disappeared. They didn't throw it into the ocean. So the overall net supply is still there. But when we see the metal shifting its location, what does that actually mean or imply ultimately?
I view it as a fire hose. Wherever the supply is going, there's a fire and they got to put it out.
Okay. And who is it that is taking the metal and holding it at this point now once it's being shifted?
I mean, who knows? Who knows who owns these contracts? But just understand, people for years have said, when's it going to happen? You're watching a failure to deliver happen. You're watching the nuts and bolts of that happen. I mean, think about this, Chris. If you go back 10 years ago, I would bet that there were not 300 or 400 tons for the whole year delivered. And you cannot print gold, you can't print silver. So if somebody's standing for delivery, and they don't accept a 20% profit bribe, they want the metal instead. This will end in a failure to deliver. That's going to happen. Is it immediate? Well, it looks like we're in the process of, just simply because of what's standing for delivery in both silver and gold. It's going to happen fairly soon.
Well, I hear you, and fortunately for any of those naysayers out there who say, "Oh, Holter's been saying this forever," we'll get there's an intriguing.
Wait, I've been saying that forever. Kiss my ass, because I'm pretty much right.